we are not relying on just any equity sources anymore, whether that's funds or traditional capital raisers, or we need to have a relationship with those people, or have a relationship of a relationship that has worked with those people, because it's tough to have your equity pull out last minute. It's pretty devastating and nobody likes it.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Rich Neuharth is an Air Force veteran that's been investing in real estate since 2010. He's currently a general partner in 600 plus units and growing. Rich, welcome to the show.
Thanks, Sam. Glad to be here.
Hey, man, the pleasure's mine. Rich, there are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
Started in Las Vegas, Nevada, just after the downturn, 2008. I started there by reading a lot of books. Right now, we are only in multifamily space. So we raise funds, manage funds, run sponsorship teams for only multifamily. So we're out of single family, no flips, no rentals, no nothing like that.
Man, that's awesome. Where are you based out of right now? Are you still buying in Las Vegas, or are you buying somewhere else?
No, we buy in Texas and Georgia. I'm based out of Denton, Texas, just north of Dallas and Fort Worth.
Gotcha. Based out of Denton, Texas, and you're buying in Denton. That's really cool. Now, let me get this straight. You are still full-time employed and still also pursuing real estate in any spare time. Is that right?
Absolutely. I tell people I got 2 full-time jobs.
Oh, gosh, yeah, man. I was talking to somebody earlier today, and the conversation went something along the lines of, you work for yourself now, which is great, but it doesn't mean you work less. It probably means you work more. And they're like, yeah, the only difference is that I get to choose when I do it. So I was like, yeah, that's probably a fair point. How are you balancing the full thing? What do you do for a full-time career?
I'm an air traffic controller.
Air traffic controller. Okay. So are you working the same shift every week, or is it all over the place on your shift schedule?
I work a different schedule every day, 6 days a week.
Holy smokes. Okay. So you're working a different schedule. Listen, if you're listening to this and wondering if you can scale your portfolio, if you can grow, Rich is your guide and mentor, because he's working a different schedule 6 days a week, every single week. He has no idea what his schedule is going to be. And yet he's still finding a way to acquire multifamily assets. Tell us, what has been one strategy that you have used in order to continue the momentum? Because I can't imagine you wake up every day feeling bright-eyed and bushy-tailed, ready to go out and acquire real estate.
No, I would say good partnerships. So I've got a business partner, and then my wife helps me as well. Managing time, just putting the important things first every day.
Got it, man. That's really cool. So you started in Las Vegas. Now you're buying in the Texas markets. Tell me, how did you make that strategy? How did you make that transition? And then when did you finally decide to go into bigger assets?
Yeah, so we started buying rental properties back in 2010. Basically, is when we bought our first piece of real estate. It sounded like a great idea. I was reading a couple of books on how to create streams of income. And I read this book. It's called Multiple Streams of Income, and had like 10 or 12 ways. I just picked a couple of them and gave them a shot. Well, rentals, I just fell in love with it. I've always been interested in how people buy real estate, and bought a couple of the no money down properties. They don't always actually turn out that way, by the way. I've had some pretty good successes in the single family game, but we've also taken our licks as well. And then 2018, we decided it was time to make a shift and partner with people that were better and stronger than us in certain areas, and bring our skill set of property management, deal sourcing, capital raising to the game, and play with bigger numbers.
Right. So 2018, you guys made that leap. What has been the most surprising thing that I think, or that you would say you've discovered since making that transition to bigger assets?
The most surprising thing is how much more fun it is dealing with the level of professionalism that we get when we build out a really great team, from your sponsors to your lenders, your brokers, your insurance professionals. Just everything is high caliber, and it's super awesome to see a project come together like of these sizes, 20, 30, $50 million deals come together. Sometimes I would say relatively flawless, compared to what it could be. Not that any deal is easy, but a lot of great people that we surround ourselves with.
Man, that's no different than I would imagine what you find in the air traffic control side of things. I mean, there is a lot of coordinated effort with a lot of people doing a lot of different things in order to get a plane from, gate to gate, or from from hub to hub, whatever it is you're doing. There's a lot of people doing a lot of different tasks in there in order to make that happen. So that's it seems like you've gone from one really well choreographed dance to another, with the same level of professionalism.
Yeah, that's a good way to look at it. I never thought of it like that.
Yeah, absolutely. That's really cool. I love it. So you guys in 2018, you started taking down bigger assets. You said one of the things that you've done is really partner up well. What does that mean to you?
So partner up well is not every project requires the same team. If you're doing a 50-unit project, maybe it's only 1 or 2 people. If you're doing a $50 million deal, maybe it's 7 or 8. Everybody would like to have 3 or 4 people on a $50 million deal, but it's not always. That's not how you start. So it was a lot of the time building our network, finding the people that we could bring value to. Some people like a yield play, just buy it, let it cash flow type deal. Other people like a value add, and so really being that super connector for people is invaluable.
Super connector?
Yeah. So when we started, we joined a couple of different masterminds, found some great people, kind of accelerated our network that way. But then after that, we find that we were meeting people outside of masterminds. And so if I got somebody in Atlanta and they're looking for a deal, well, I've got somebody else that I know that is sourcing deals, the sponsorship team, the net worth, the liquidity, and we can arrange that and get more deals done with people. And it's fun.
How have you strategically decided what, or who, I should say, who to partner up with on projects and who not to partner up with?
Yeah, I would say that we learned the lesson the hard way in a couple of the instances. The first group that we partnered up with, great guys, a lot of strong communication, organizational skills. They had a lot of success, and it was in a tertiary market, oddly enough. And then our second deal was it was a referral, and we didn't really ask the questions, which I think vetting your sponsor is something that's insanely important that a lot of people overlook right now, but they just didn't click very well with us. So we're, in this deal for 5 or 6 years, and not that we don't get along or we're butting heads or anything. It's just different styles of management and control. So
that's a tough place to be, because these are, like you said, 5 to 7 year projected deals where you're partnered up for that period of time, and or until that asset is sold. What are some things that you feel like you would have asked or done differently, maybe on the front end, especially when you said vet the partner a little bit better? What would you have done differently?
I would have spent a lot more time asking just honestly more detailed questions, getting to know somebody truly, like not just partnering up with somebody because they have a deal or because they have, a skill that I don't have. They could have something that I don't have and be absolutely great at it, but then you put us together and it's like oil and water, and you just don't want that. So I would ask questions, background, how many deals you've done. To be 100% honest, I wouldn't do a deal with anybody that I didn't go out to have lunch with regularly.
Right.
Or, I'm not talking to on a monthly basis or something like that. You want to, in my opinion, it should be a pretty good friendship. You should be able to ask the candid questions. And, a lot of people I see rush to just do a deal. And I think it creates a lot of bad vibes amongst partnerships and in properties too.
Is there a way from a passive investor's perspective to spot that?
A bad partnership?
Mm-hmm.
I would say Same thing would kind of apply to the passive investor side. You really need to know who the sponsor, like who's actually running the deal. So in some of these syndications, maybe there's, let's say, 7 or 8 partners. You have your lead sponsor, the person you go to. Let's say it's me.
Right.
And you have a relationship with me, but you don't know who's beyond me all the time.
Right.
But I would say it's really about relationship building is what it comes down to. You need to know the people in the deal, who all is there. It seems like a lot of times there are a couple of key figures in each deal, but you don't always see the whole team or the whole picture from the passive investment side. And I think it is really important.
Yeah, for sure. Yeah. And I think you've answered it to a certain extent, which is, there's I have a relationship with you, but I may not necessarily know who the lead sponsor is if it's not you in particular. And I'm just curious if there's a quick way to identify a potentially problem or poorly vetted sponsorship team in advance as a passive investor. I've got some ideas on it, but I just didn't know if maybe there was other things that would come to mind as you say that. Because again, like you said, you're not in deals right now where you're like, hey, there's bad blood, it's just not what it could be. So just really curious, from the passive investor side. But either way, it sounds like you've answered that question. So I appreciate you taking the time to kind of mull that over. Certainly appreciate it. What's one thing you guys are doing right now moving forward? I mean, you're buying, you said in the DFW market, right? Or in the Texas markets as a whole?
Yeah, so we do buy in DFW. And then Georgia is another major market of ours.
Got it. What are you doing to be competitive in today's market?
Well, I would say we got a couple of different aspects. We do the traditional direct to, dealing with our brokers, building relationships, go golf, travel, visit, tour lots of properties. Touring properties gives us probably the most solid looks at off-market deals. Because let's say I travel from DFW to Atlanta, I go tour a property. Well, the broker, most of them, if they're good brokers, they're like, well, you flew all the way out here. Let's go check out, I'm working on a listing agreement over here, and let's talk about this operator and this operator. And we found so many off-market deals just by traveling. So maybe it cost me $600-700 for a plane ticket, but I walk away and I get a full day of touring properties and photos and social media content and catching up with them. So huge right there. We do run a couple of direct to seller campaigns as well.
That's something that, for those that want to ride a desk and pick up the phone and make deals happen. I remember, gosh, this has been several years ago. I was at a meetup here in Memphis, and this young guy, walked up and he said, "Man, I just started 6 months ago," and he was wholesaling houses, right, and was just blowing the doors off. And I'm like, no pun intended. Or maybe there's a pun intended. But I said, dude, what are you doing? And he goes, I find absentee owner properties. And again, I'm not advocating for this necessarily on the show, but it just shows you what the hustle does, to your point of actually going out and traveling and going and seeing. I go to absentee owner properties. I find the owners, obviously wherever they live. And he goes, I go knock on their door. He goes, I knock on the front door of the person that owns that rental property. I don't mail them. I don't call them. I knock on their door. And he goes, dude, I am moving properties as fast as he goes, it's just unbelievable pace, where everybody else is still standing in the room going, gosh, how do I get my first deal done? I'm like, genius, of course. Like, just do what everybody else isn't. And I think that's what your point is. Spend the $700, go out, spend the day. You go see every property in town that you could possibly visit. So I think that's really, really cool. Awesome. I love that. That's a great way to stay competitive. What's a risk that you might see in the market, or risk that you see other people taking right now that you guys are actively avoiding?
Rushing to get deals done. I still see a lot of that. I think there's still some overpaying in the market, considering how everything has kind of been, low leverage, high interest rates. Sellers still want a premium, even though it may not necessarily be there in value. So we have been there, tried that, and we've moved on. So we're very calculated when we submit our LOIs and what our pricing is. And I would say that we are not relying on just any equity sources anymore, whether that's funds or traditional capital raisers, or we need to have a relationship with those people or have a relationship of a relationship that has worked with those people, because it's tough to have your equity pull out last minute. It's pretty devastating and nobody likes it.
No, and it sounds like there might have been a situation in which your equity did pull out last minute. Is that what I'm hearing?
Yeah. So we were almost to the closing table down in Corpus Christi earlier this month. A couple of late 60s properties. We had all the equity lined up. Everything was good to go until about 2 weeks before closing. And then we had a couple of significant players back out and change their commitment last minute.
Wow. What happened?
What it boiled down to was a little bit of pref equity, and a large fund and a 1031 exchange decided that the market was softening and they didn't want to be in Corpus Christi anymore, and they wanted to do business somewhere else.
Wow. What could you have done either differently, or what will you do differently in the future to ensure that doesn't happen again?
We've talked about a couple of different things with 1031 exchanges. There's been a lot of movement. We've seen it on a couple of different projects, not ours, but maybe people that we know, where that 1031 is committed, let's say, a good chunk of money. Like you already won $500,000 or so to bring a 1031 on sometimes, but doing maybe a non-refundable deposit, because we've seen a 1031 commit and then they'll jump ship to another deal if it's an option for them sometimes. So we've looked at doing that. Go ahead. You look like you got a question.
I was just curious how you can read me. How do you get a 1031, depending on where they are in the process? How do you get them to put down a deposit and or commit hard money earlier in the deal?
Well, we're just upfront about it, that if you're committing, so one story from really good friends of ours, they had a really large 1031. I think it was like $3 million. It was basically going to cover the full raise.
Right.
And then they kind of rearranged their equity around this check, because they were like, great, we don't have to do any raising. We don't have to do anything. We just go straight to the closing table. And then when it came time to actually transfer the money, the 1031 said, no, I had another deal that I had identified and I'm going to move my money over there. And there was so obviously it puts them in a bad place. They had time, they got it done, but nobody wants to be in that position. So
No. And I wonder if there's because I just wonder about the complexity of this, and I'm just talking out loud here because I don't know. But if you have a 1031 exchange and let's say there's $3 million coming in, is there a way to get the intermediary, whoever's holding that 1031 money, assuming that it's already there, if they've already sold their property, is there a way to get a deposit on that? Like, hey, you're going to put 10% down now, and then the other 90% when it's time to close, or whatever it is. I mean, at that point, like to your point, that's real money. At that point, that's $300,000 at that point, and you're kind of putting your money where your mouth is. But that's a serious risk, and one I've not actually heard of. Is a large check. I mean, obviously you heard of people pulling out of deals, but that presents a new wrinkle in the mix. When it's right time to close. Were you guys able to get that property that they pulled out of closed?
Ours in Corpus Christi, no. Unfortunately, we lost that deal. The sellers didn't want to agree to an extension, or we just couldn't hash out the terms. So we decided to part ways and move on to the next one.
Wow. Okay, man. Rich, thanks for taking the time to share. That's a painful story for anybody listening to this that doesn't understand. I mean, because it's so much work that goes into getting a deal that far along. I mean, you guys are, you're a lot of money and a lot more time in. By the time you're 2 weeks to close, I mean, you're at the finish line at that point. I mean, and then to have your equity pull out that's brutal. So, man, thanks for taking the time to share that. I mean, other than getting your deposit on that, was there any other action item steps that you would take next time if you're presented with a similar scenario?
I would say for anybody out there just starting or maybe newer in their, lead position, taking down a project, make sure you've got at least 2x of what you need to raise ready to go at any time. Maybe even more than that, honestly, especially right now with, 65 to 70% leverage being pretty common throughout the US. You got to make sure that things are going to change. The market's going to change. We know interest rates are going to keep going up, at least for the time being. So you got to be able to adjust, especially in that 1 to 2 week period before close.
Is there a communication? Because I've often wondered or thought about this. Is that if you read the oh gosh, I'm going to talk about a book now I can't even remember the title of, but he did. When I think of it, I might come back and put it in the show. But basically, he said that if you go through history, you'll find that investors invest, especially passive investors like stock market investors. Okay, put money and forget about it. They tend to invest at the completely wrong times in the cycle. Of course, everybody's terrified, so they start pulling out money at the bottom, and then they start pumping it in at the top. And he gives some really compelling data over like 70-year periods as to why this happens. I've often thought as a deal sponsor, like one of our jobs is to not just advocate for what we're doing, but also to educate our investors. So that when it becomes time, when everybody all of a sudden starts going, oh my gosh, I'm terrified, the sky is falling, everybody run. It's like, no, actually right now is probably the best time to be getting in. Is there anything that you can think of? Because as you said, the investor sentiment is changing. Is there anything you guys are doing proactively to make sure you stay in front of investors and make sure you not just project confidence, but give reasons as to why what it is that you're doing currently makes sense?
Great that you brought that up. I was just having a conversation, I think this last week. We were in Vegas for a conference, and I was talking about somebody there. Warren Buffett talks about it all the time, like when people are fearful, right, go after it, like that type of thing. And that's exactly what's happening right now, is everything is softening and people are like, oh my gosh, the market is crashing, let's not invest. But we're on the opposite side of that. We see properties coming available.
Right.
Maybe their bridge note is being called due.
Right.
And they can't refi out of it, or they can't sell it right now. Those are opportunities to be had. Market and the cap rates coming down a little bit. They're not completely just washing away by any means, but there are better deals to be had. There's more cash flow to be had. So yeah, great that you brought that up. I think more investors should be placing more money in the market right now than 6 months to 18 months ago, when everything, it was at the top. Yeah, it's crazy. So
it really is, and finding the right way to convey that message, I think, is a challenge. But I think it's something that we, as deal sponsors, again, assuming that you believe in what you're selling, because if you don't believe in it, obviously don't do it. But as deal sponsors, it's something that we need to be, actively sharing that. The book I was thinking of was Mastering the Market Cycle by Howard Marks. It's a great book. And gives some real insight as to the psychology of the common investor. And it's kind of eye-opening. But anyway, look that up if you're so inclined. Rich, thank you for taking the time to come on the show today and tell us, what you guys are working on. You've shared some painful lessons here today with us. I know you guys have had awesome success in what you're doing, but also at the same time, you've taken some licks and you were willing to share those with us. So thanks for doing that. And hopefully you can save some of our investors the same heartache that I think all too well. So again, thanks for doing that. Appreciate it. If our listeners want to get in touch with you and learn more about you, what is the best way to do that? Yeah,
the best way is through our website. It is avianacapgroup.com, avianacapgroup.com. You can also send me a direct email if you'd like. It's rich@avianaco.com.
Fantastic. Rich, thank you so much for your time today. Certainly appreciate it.
Thanks, Sam.